Hi everyone.
My name is Dave Miles. I am the moderator and presenter today. I want to welcome you to the webinar, The 5 Reasons You Should Use Valuation Software and What You Miss If You Don't. The other thing that you need to know is that you should vet the information for yourself. So you should, we're going to talk about the software today. At the end of this, you should seriously consider getting a hands-on experience and see if it really will work for you or not. And the last thing is that as far as the handouts go, they're over there in the GoToWebinar Navigator. You're welcome to download those. You're welcome to contact me at ValueSource, and I'll make sure you get those. And you're welcome to ask questions during the presentation or afterwards. Feel free to reach out to me. I'll be happy to answer those questions. So my name is Dave Miles. I'm a CPA, CVA. I've been at ValueSource as a valuation manager for 17 years now. And I am the domain expert. I'm supposed to match what the marketplace needs are to the programmers and be that bridge between the two sources there. So what I want to go through today is I want to talk about how software will guide you through the valuation practices, how there's automatic database integration and what that means. All of these issues have pain points. If you're not using software, we'll talk about that. We'll talk about the written report writer, and we'll talk about smart and flexible content. And then we'll finish off with the comprehensive methodologies and schedules, and then we'll do a quick hands-on demonstration. So the first topic is guide you through the valuation best practices. What is the pain point of not being guided through best practices? What do you miss? Most people that I go out and talk to about valuation software that are using their own templates have a spreadsheet. It's about 30 worksheet tabs long, and inside of there they kind of manipulate things and they come up with the different schedules that they typically use. And what's missing out of there is that when you have an extra circumstance, or when you're trying to create other working papers, if it's not in those 30 tabs, you have to start over and you have to create a brand new one and stop what you're doing, and the efficiency goes down. The other issue with it is that as you have your own templates, you have to manage that, and as you manage it, that takes time and effort. What the software has inside of it is that it has a navigator tree, and that navigator tree goes from top to bottom, and it has every possible schedule you could want. And one of the nice things about that is that you don't have to build the DCF model if you're used to using a cap of earnings model. It's already in there. And the other thing about the software is because there's 300 worksheet tabs is that a lot of those tabs are automatic now. So I will show you how you create a historic financial statement, and if you insert a new revenue account, say, it also goes and creates automatic common size for you, and it goes and creates automatic trending, growth analysis, compound annual growth, CAGR stuff. And that's all done automatically. And so software will help automate some of that process. Database integration. What we want to do is we want to automate the processes as much as possible, because that will make us more efficient. More efficiency means a better realization rate at the end of the day. The other thing I would say is the pain point of not being automatic is that most of the databases will drop into an Excel sheet. If you asked most valuation professionals out there what the biggest error is they would say, well, it's not matching the benefit stream to the discount rate. There's a disconnect between the risk and the risk of the cash flows. And I would say, well, maybe on a theoretical basis that's true, but I would argue that copy and paste is the biggest mistake that most valuation professionals make. Usually it gets caught in the office before it goes out the door, but if you can get that copy and paste so that it's not pulling forward information from a previous engagement, or that you're not off by a row or a column when you copy and paste the data into your analysis, I think that you've eliminated a lot of the errors that could occur. And I will show you how you can put a multi-year analysis into your working papers, and what that means is that you can spend your time analyzing the data as opposed to ditch digging and copying and pasting the data. I'm also supposed to say that BV Data World, KeyValueData.com has analyzer tools. It's not necessarily the software, but if you have one of the subscription data packages, those analyzer tools will also help you analyze the data faster and easier. We generate automatic standards-based reports. Now, inside of the software, there are three reports that come out. Use PAP, SSVS number 1, and a 5960. And there's very little difference between the three. Usually it's the standard of value and how it's described. What's nice about the reports that come with the software is that there's something called optional content. And optional content will pull forward the information that is needed. So if you're not doing a DCF model and you're only using a cap of earnings model, then it only pulls forward the cap of earnings model stuff. If you're new to the business, using our reports makes some sense until you get a feel for how to write reports. They're a good backbone. Once you've been in the business for a while, what you really want to do is create your own reporting template. It has your style, has your fonts, has the way you describe things. And then what we have out there is something called a hot link. And the link will actually bring forward the working papers into the reporting process, and as information changes in the working papers, it will automatically change inside of the report. I don't want to say automatically. You have to push a button to make it happen, but once you push that button, you can get that copy and paste happening inside of the report. And I will show you an example of that here in a minute or two. Now, the smart and flexible content, I believe that valuation software has to be customizable, at 2 levels. And this is what having your own spreadsheet templates is usually about, is that the facts and circumstances of the case get exploited or get explored or get put out there to discuss relatively easy. And so if you have software, you have to be able to match that. And so I will show you how you can go out and modify things either on a template basis, meaning I always want to start from this point and move forward, or on a case-by-case basis and say, look, here's this particular project, I need to modify it. The smart content is all about the ability of the schedule to reframe itself to match what you're trying to do. I said a minute ago that the biggest theoretical error is matching the benefit stream to the cap rate. Well, if you choose our assumptions, our schedules automatically do that. And I will show you an example of how if you were using a equity approach, a build-up cost of equity, and you wanted to change that to a weighted average cost of capital, that changes your benefit stream, and you need to know what those areas are, but it will happen automatically using the software. There's other things that happen inside of here. There's smart printing so that there's headers and footers created automatically on the working papers. I don't know if you've ever been inside of Excel and you try to get all of those headers to match up. You can group sheet tabs, but usually that gets a little on the dangerous side. And we can show you what that looks like here in a minute. Charts, if you have charts and you have 4 years of data, 3 years of data, 5 years of data, you know, do the charts automatically collapse and move forward from there are some of the things that occur. And lastly, I want to talk about, you know, there's over 18 methods inside of this and over 300 schedules. So the pain point of having your own templates is that have you really gone through and built all of those models? Do they all link to one another so that the same information is being pulled forward? If you have a after-tax cash flow, is that being pulled forward in a correct manner, and is the model being appropriately used? And if you have too big of a template, it becomes unwieldy and hard to manage. And if you have too small of a template, then what happens is that you don't have the ability to go out there and do all of the models and see what the differences might look like. And so I'm just trying to show that there's 18 methods inside of here and 300 schedules. All 3 approaches are definitely covered. So let me flip this over to the software piece here. And give me a second. I'm trying to gather my stuff. So inside of the software, what we have is a bar that goes across the top of the screen. This here is what gives us access to all of our different working spaces, and it creates, you know, the control panel, if you will. Here's the home screen. This is the working paper or Excel icon. This here's the database working space, and this here's the report working space. By clicking on those different icons, you get to go to different areas. So for instance, if I come over here to the home screen, I get to access, here's all my files and help system. If I go to the working papers, I can click on it and I bring up my working paper analysis. The menu items are dependent on what workspace you're in, and there's some icons to get to the most common menu items, and then there's taskbar buttons out here for the working papers. The taskbar buttons affect this particular working schedule. The navigator tree works its way from top to bottom. Let me open up a couple here. Underneath setup, you can tell that there's an assumption sheet. This here is where we tag the different ways we want to approach the valuation. The assumptions apply to the levels below it. There's spreadsheets. I'll come back to this spreadsheet in a moment and tell you how we build our spreadsheets. And there's charts. In this case here, it's a double axis chart, and that's what we're seeing. As you work your way down, setup, statements, analysis, appraisal methods, conclusion of value, and if you were to put this on a machine and get a hands-on experience, the first thing I would tell you to do is open up the working papers, the sample file, go from top to bottom, figure out what each particular schedule is trying to accomplish, and that'll give you an idea of where the software is available to you to get the job accomplished. When we have our spreadsheet over here in the working pane, that's what I call this area over here is the working pane. The spreadsheets have three different kinds of fonts. There's a white box, and that means that you want to type in some information. So let me change the name of the subject company here. I'll change it to ABC Plumbing from Child's Clothing Store. Now the second one here is a blue font cell. Blue font cells are stuff where you can type over the top of this and change it. Think, for instance, in this case here, it's the short business name. So if I'm in the report and I want to use a shorter name for the subject company, instead of calling it ABC Plumbing Inc. every single time, I would call it ABC. I can type over the top of that. We also map data to certain places so that if you wanted to type the data over the top of it, you could. And that's what the blue font cells are. They're unlocked. We're not sure and certain that's the information you want, but we're pretty sure that it should be that. Then there's these black font cells, and as you type on the black font cells, you're going to get an error message. What that does is that's locking up the spreadsheet. I don't know if anybody locks up their templates out there to prevent overwriting of information, but that's a big error inside of spreadsheets, is that somebody will overwrite a formula or do something and break the spreadsheet. So we try to eliminate that by having just these black font cells. That doesn't mean that it's not flexible. So if I click on the green X up here, I'm going to go out to the spreadsheet. Now this is native Excel. Anything I can do in native Excel, I can do inside of the software. There are some ways that you need to understand how we built the spreadsheet, but those are pretty easy to understand. And in a training video, I tell you what those are in about an hour. But I could come out here and I can change the labels. So if I don't like the labels that are inside of the software in its native default working space, I can just change that. If I don't like fonts, I can change the fonts. A lot of times people will put dollar signs on the tops of schedules and on the bottoms of schedules, and we don't do that in the native thing. But the idea is that you can go out there, if you need to insert some rows or columns, you can do that, just not in the financial statement area because we have some automation in that area. So, understanding how the software is built is a necessary evil. But if you just take it and use it straight out of the box without customizing it, you should have no problems. That's how the spreadsheets are built. Let me show you the financial statements. And obviously I don't have time to show you every single thing that's built into the program here. But one of the things is I want to show you how automation works. So we have a revenue up here, and let's say that there's a widget A that needs to be put in place. If I choose my taskbar button and I say insert a new account, what's going to happen is that a dialog box will show up. And this dialog box will allow me to add a new account or sub-account. I can put it above or below. I said it was widget A. So I type in my title, and then computers are kind of stupid, so I have to tell what properties this has. In this case here, it's an income statement item. It knows that. I need to know if it's a revenue, cost of goods sold, or operating expense. More importantly, there's a property, though, that says, is this a cash item? So it'll say none. Non-cash or depreciation, we know how important that is if we're doing after-tax cash flows. So I can tag that, whether it's interest or depreciation or a cash item, and I tell it what property it has. So all of these revenues are going to be cash revenues. I press OK. What's going on now is that it's going to about 17 different schedules, and it's typing in that row, and it's putting it in place. And I believe that somebody has a question here. It says, can you tell me how many copies of your software are out there? And that is how many folks are using your software in the real world. We have thousands of people using the software in the real world. And that's one of the advantages of the software is that when thousands of people are doing the same thing over and over again, if there's a glaring mistake, CPAs are not, or I should say business valuation professionals are not shy about telling you there's a mistake inside of there, and so you have thousands of people quality checking the work as well. So I put in this information. Let me put in a big number here. And so we see the $500,000 showing up in year 2014. That automation shows up down here inside of the historic income statement. And I don't know if you can tell or not, but when I inserted that row, I now have on my common size widget A revenue, and I get an automatic common size 7.73%. If I come over here to the financial statement trends, you can tell that I also get a compound annual growth rate for that same line. Now it doesn't have a growth rate inside of there because I didn't put in a base year. Compound annual growth is based off of the base year. If I were to put something in there, then it would calculate automatically what that compound annual growth rate is. And that would help me analyze this and normalize it. And that's the kind of automation that you can get that I typically don't see inside of a template. We want to talk next about that automation of the databases. So when I do a industry comparative analysis, how does my subject company sit in the market space? RMA is typically a database that I'll use, and this schedule here shows you that we've automatically brought forward the income statements from ABC, and the information over here is in zeros for the RMA data. So I go over to my database working space, and these are all of the databases that integrate with the system. Now, like I said, I'm working on RMA specifically. I come up here, I choose my multi-year analysis, I choose my base year, 2012, and I choose how many years I want to download. I choose what my industry NAICS code is, and then I can choose my slice of data, sales, national, and I'm going to choose 1 to 3 million. Let's say this here is a small regional city firm, 4 or 5 partners. When I click on the button down below, Analysis, it's going to dump this information into the analysis sheet. And this is that automatic part that I was telling you about. I'm waiting for the view to catch up here. And you can tell there's a dialog box here that says download is complete. And I'm going to click OK on that. At this point, I'm going to go back into my spreadsheet, and you can tell that information has downloaded into the software. And that's the important part. One thing I like to show people is that if you were looking over my shoulder while I was using the software, I think you can gain a lot of insight into how the software is built and how it looks and feels. The most common approach I feel out there by far is a capitalization of cash flow, capitalization of earnings, and so let me do this single period model for you. Let's assume that I've already put in my normalizing information and I'm pulling forward that normalized benefit stream into my model. So my assumptions is what I set up first. These are all the different benefit streams that I can choose. I'm going to choose after-tax cash flow as my starting point. I want to use my normalized or adjusted base. I'm not a big whack kind of person, so I'm going to leave that uncheck marked If I was, weighted average cost of capital, I'll check mark that. I'll come back and show you what that does to the schedules in a moment. I'm a weighted average kind of person, so I choose weighted average. I come over here to the rate calculation and I choose the build-up cap rate. I'm going to leave this at SBBI. Most folks these days are using Duff & Phelps decile information. They're going to choose excess of CAPM. They can choose which part of the decile they want. A lot of people choose 10Z, some people choose 10B, even fewer choose 10. But however you want to apply that, I'm going to leave it back here at SBBI because that's what my schedule is set up for. This capitalized against year 0 or year 1, what that means is in Colorado, in matrimonial dissolution, we have date of trial. And so we don't want to use information past the date of trial. So showing a benefit stream that's for next year so that I can actually discount it back to today's number looks a little funny to the courts. So what they prefer instead is for me to do the algebra on the discount rate and just show a year 0 benefit stream so that information isn't being pulled forward past that date of trial. If I was doing something for the IRS in a wealth transfer engagement, I would choose year 1. They're expecting you to go that year 1 and discount that back. If I want to use the industry risk premium, I click on it here. Mid-year convention is an available option, and then I can apply my premiums and discounts. Now I can apply these premiums and discounts at both the appraisal level, or I can apply it at the conclusion level, and it just depends on how you practice and where you want to see that information. I think that most people today are probably applying that after they come to a value, and so the conclusion of value is where they typically do that. But I'm going to leave it on here so you can see what that looks like. Our next step is to come out to the schedule and fill in our white boxes for the benefit stream. As I said, I'm a 5, 4, 3, 2, 1 kind of person. Now I haven't analyzed any of this data, so I'm just putting in numbers to help me understand about where we're at, and then I can go back and really analyze the data and come up to my value. I just want to show you how fast it is to get that information is. Gives us an ongoing benefit stream here of 705, and then what it's going to do is it's going to take out the weighted average depreciation amount so I can calculate a taxable amount. The taxable amount is 574. In Colorado, we're a federal tax plus state, somewhere between 5 and 8%. I'll put in 7%, and then it's going to calculate the federal taxes. Now that federal tax calculation you can see by using the tax table up on top, and that will open up the tax table down below, and the 181,541 is here, and those two match one another. So if you want to show how that calculation was done, you can show that on your screens. Then it'll bring the depreciation back, and it'll ask me for my changes in balance sheet. So I'll just put in minus 50,000 for working capital. Let's see, it was 131, so I'll put in minus 145. It's probably on the high side for my capital expenditures. It's going to be a little higher than the weighted average depreciation amount I was using. Gives me a benefit stream here of 289. Next step, I'm going to go to my discount rate. So this information, the 345, comes in from the SBBI information or the Duff & Phelps information. If I don't have those databases that I've purchased additionally, I can type that information because they're a blue font cell. The company-specific premium comes from another schedule, or I can just type in the information here. Let's say it's 8.5%. Obviously, some of my numbers up here are pretty low, and that's why I'm going with such a high company-specific premium here. Growth rate of 2% gives me a cap rate of 18.5%. The next schedule down is the indicated value. And so the model is saying, here's my benefit stream, I grow it by 2%, gives me next year's benefit stream, capitalize it at 18.5%, gives me an indicated value of equity. I should say that we only calculate equity values inside of the software. We don't calculate enterprise values, nor do we calculate asset values. Applies my discounts, adds back my excess assets, and comes up with $2.3 million. So let me go back and change the way I approach the valuation and change some of my assumptions. And what I want to do is change this to the weighted average cost of capital. So when I change it to the weighted average cost of capital, let me come back up to the top here, you can tell that my interest expense comes back on because I'm going against the average cost of capital, not necessarily against equity, and so interest gets added back here. When I go over to my cap rate, I get to put in my amounts for the debt portion of this. And that's going to give me, I can iterate this as well. I should say that if I wanted to, iterate this, I could. If I'm doing a minority interest, I probably wouldn't iterate it. But my growth rate down here cannot be the same for a benefit stream to the cost of capital as a benefit stream that has the benefit of leverage and goes straight to equity. I have to have a much lower amount here. So I'm going to put in 0.5%, gives me a WACC of 12.61. When I come over to my indicated value, you can tell that we have the same things here. Benefit stream, growth rate, break it down. Then we add back the value of the debt, and we come up to a subtotal here, then apply our discounts and apply our excess assets, and I'm 2.5 million. So I think that my 0.5% and 2% aren't quite the exact same yet. I probably need to go in and flush out that 0.5% a little bit more. But that can give you an idea of how fast it is to create a value inside of the software. You can also use this to double check other people's numbers very quickly. If you just type in a very summary number on the income statement, here's revenues, here's operating expenses, cost of goods sold, about 10 or 15 numbers, you can run through this analysis very quickly. I'm going to jump down to the conclusion of value. Those are all of the methods that are included inside of the software. So I'll expand this. The report writer has this idea of optional content. And so if you choose 1s, it's going to bring in that optional content. If you choose 3s, it's not going to do anything. And if you choose 2s there, it's going to bring in the optional content that says this is rejected. And then you can choose your weights, whether you're a weighted average kind of person or choose 1 kind of person. You would just set those to be the value that you want. And that's what that looks like. Now the report writer has the ability to go into the working papers, into the Excel piece, and pull forward information that's inside of there. So you saw me change the name of the company from Child's Clothing Store to ABC Plumbing. Then what I do is I click on my update button. And when I do that, it will go over to the working papers and it will pull forward all of those links. Now you can do this inside of Excel and Word. It's called OLE, or object linking and embedding. You have to make sure you get your sources right. You have to make sure you get your targets right. What I like to say is that we wrap code around Microsoft Office to make it easier to use than Microsoft Office. And you can tell that my link over here changed. It's now ABC Plumbing. Now think about that for a second. If that link happened to be a growth rate, or that link happened to be a benefit stream change, all of my indicated values, all of my conclusion to values are going to change. Let's say somebody came back with a different appraisal on the fixed assets and I chose to make those excess assets. If that's the case, then that's going to come over with new numbers. So if I just change the update links, all of those new numbers are going to come in. I'm probably not going to describe it any differently with my text, but the number would change. And that's really the advantage of the report writer. So let me show you how easy it is to make a link. I come back over to my analysis paper. Let me go back into my appraisal and go over to my cap rate page and say, okay, I want to bring across 12.61. That's my cap rate. So I highlight the cell, I go up to the top and I choose the icon that says copy the link. That will copy the link and put it onto the clipboard. I then go over to the report workspace, and inside of the paragraph or on the line where I want that information, I click on the icon that has the clipboard and the plus sign, and that's my paste link. It will now paste that particular link into place. Now if I drop this down, there's a few choices here. I can paste a name cell, a range, or a word table. And I guess I'm getting ahead of myself a little bit because we should talk about how to copy an entire schedule across. So if I want the whole schedule, I just highlight the whole schedule. I click on my copy link button. I go back into my report. Wherever the cursor is flashing, I press my clipboard and it will paste a picture. And this is a picture, and so I can make it bigger or smaller. It keeps the aspect size, and as the numbers change inside of that picture, I press the update button and it will come in. As I said, if you've been in the business for a while, I highly recommend you bring in your own report. It's very easy. You just load up your document. This is a Microsoft Word document, and we build those links into your report. If you're new to the business, then we have 3 templates, and you can build those templates out to meet your needs. You can see what the backbone is, the outline, and change it up for each individual engagement. I guess I should also say it makes sense too, if you're only doing 2 or 3 valuations a year, use our templates and customize each individual report. You'll spend more time customizing those reports, but modifying your own template probably doesn't make sense in that respect. The things I need to say about the report is that it is Microsoft Word, and as a result we have headings, and these headings are in the styles category of the program. So I'm trying to come down here. What styles does is it allows you to build tables of contents, and it allows you to build footers and sections and things like that. And so understand styles inside of Microsoft Word. Even if you don't use the software, using styles inside of Word is an incredible boon for a valuation professional. Writing reports becomes significantly easier. Let me take it out of the realm of valuation. My daughter was in the IB program for high school, and she had to write a 140-hour essay. When she got down to writing the Word part of it, I had taught her styles inside of Word, so she was able to format her tables, format her headings, and it took her about 30 hours to write the report. It was taking her friends 45 hours to write the report, and that just gives you an idea of how much time savings you can put out there by formatting paragraphs and blocks of text using styles. The other thing that you have to understand is that these links are pictures. And let me come back up to my picture. So you have to understand how Word handles pictures inside of the document. You can make them bigger, you can make them smaller, you can make them go around, and you have to make sure you understand how to format those pictures inside of Word. And that's really where we get the issues with our report writer is that I shouldn't say most, I should say some of our clients are not as well versed inside of Microsoft Word as they would like to be. And I'm sure that they would like to have more programming knowledge, but Word is a word processor, and it's not just a typewriter. And so I just wanted to bring that out. So let me check the questions. So there's a question here about NACVA and ValueSource. ValueSource has been around since 84. David Fine was one of the co-founders of the company. He sold it to a company called John Wiley. It was a book publisher, and then a few years later he repurchased it from the book publisher. NACVA is a training company that puts out CVAs, and it helps people understand business valuation. And it's a very, very close and good fit. So somebody who builds software tries to sell it to somebody who teaches valuation, and software would help those people understand valuation faster and better. So we have a very, very tight fit with NACPA. The Business Valuation Manager Pro is our software, but it's branded for NACVA. And that's what the issue is. And so you can purchase the same software through NACVA, or you can purchase it through ValueSource. That's where I want to go with that particular question. Let me bring back my slide deck. Let me show my screen again. This is Tanya, and as I said, she'll be happy to help you. Feel free to reach out to me with any questions you have about the software or about the databases that we utilize. I'm very fluent in all of those databases, and you know, a lot of times understanding them a little better helps make that proxy between a subject company and the data itself a little easier to do. I want to thank you for spending some time with me this morning, and at this point here I am going to sign off and say thank you very much.